Hello, my friends. It's Robert Miner with Dynamic Traders Group with a brief video for our Twitter followers and YouTube followers and subscribers. If you like what you hear today, hit the subscribe button, hit the like button, and that way we can notify you whenever we have another update. So I hope 2 weeks ago, when I did the update on gold, you took advantage of that information. And also, you can go back and review that. You'll learn a lot about trading strategies and how to identify a trade. Also, this gold bull trend, I think, is just in the initial stages. So there's still going to be lots of opportunities, although probably next week or the week after, we're going to have what we call a weekly high in gold. But let's focus on what we're going to look at today in some detail, and that's the S&P, and it applies to all of the stock indexes. And as usual, I'm going to explain to you exactly how I'm looking at it and give you an idea of some trade strategies in the days ahead, because I think next week is going to be one of the great opportunities of this year in the stock indexes. So that said, let's get started and take a look at the S&P. This is the SPX weekly data, and let's take a look at it in some detail. I'm going to start at the bottom here in our momentum cycles. The momentum cycle is what we call dual look back oversold. It's in a position from where a weekly low is made. But we did have a weekly momentum bull reversal about 3 weeks ago. This week in early October, no real follow through to that, just kind of sideways to up for a week or so. And then we had this deep dive of the last couple of weeks, which has turned a lot of people really bearish. Well, I think the weight of the evidence is strongly in favor of completing at least a weekly low this coming week. So again, the momentums are dual look back oversold. At least it warns that the downside is relatively limited before a weekly low would be complete. This past week was the 100% alternate time projection of this flat ABC correction. So since the October low last year, there's only been the one major correction is this 13-week correction, and last week was 13 weeks from the July high. So we're at that extreme time-wise of when a low is frequently made. So we want to be aware of that. Then let's look at the pattern coming down. I'm looking at this as the best wave count anyway, as a probable A, B, C, D, and an E. That's a 5-wave correction with an overlapping wave D with the wave A low. That indicates that this is probably a corrective decline. Now, I do want to tell you from an Elliott Wave perspective, there is the dreaded alternate wave count, but don't have the time to go through that now. But both wave counts, the one I'm showing you and the alternate one, both indicate that the stock indexes are reaching an extreme position from where at least a weekly low is made. And what we mean by a weekly low is generally that's followed by 3 to 4 weeks of counter trend, if not the beginning of a higher time frame, in this case, bull trend. So at the least, we'd look for 3 to 4 weeks of sideways to up when this weekly low is confirmed. And we're near those extremes when I think it's going to get confirmed next week. Let's move on up here. Of course, everybody knows that next Wednesday is the next Fed announcement. I've got the Fed announcement since last fall marked off on this weekly chart. And you can just see, usually within a week of that announcement, and typically right on that week, there's a reversal that at least lasts a few weeks. So we just want to be aware of that. When we have a momentum cycle at an extreme, we have a time cycle, a time factor pointing to a weekly low coming into a Fed announcement. Well, that's pretty important, and you want to be aware of that. So here's where it all comes together from my point of view, is we've got momentum, we've got time, we've got, now we're going to look at some price relationships. And by the way, a pattern also, a corrective pattern. Price relationships, and this is where it gets really interesting, and we'll even fine tune these a bit on the daily chart, but 100% alternate price projection of what I got labeled the wave A from the wave D high is around 41.34, which was reached last week. The 100% alternate price projection of what's labeled as the wave C from the wave D high, a little bit below the market, around 40.79. And those two 100% alternate price projections overlap the 62% retracement from the March low. And by the way, retracement-wise is only relevant from the March low. So if you see people doing retracements from the October low, well, they're probably not someone who actually trades or uses fib retracements and alternate price projections successfully. The retracement is only relevant from the March low into the July high. And of course, this is a key one that was reached also last week. So we're right in that zone, not too far below that at about 40.48 is the low of this, what we might call a congestion range from back in April and May. About 6 or 7 weeks it was in this area. That's the low of it. That would be probable extreme on the downside before this weekly low is complete. So that's not too far below the market. So this is in a real important position that has a high probability. Actually, next week we want to be alert for any sort of reversal that might indicate that this low is complete. Let's take a look at the daily data. This is the SPX daily data coming off of the July high. It's got the same 100% alternate price projections here. This is also the 162% external retracement of what I've got labeled a wave D. I did do, I don't know if it was a video or just a posting on Twitter a few weeks ago about this advance and how it closed into the closing range of wave A, indicating that the SPX was in a position to have completed an ABC correction. And it just went sideways for about 1 week. And then, of course, we had this deep dive the last couple of weeks. But it never completed the setup to get on the long side. So that's what's really important is when you believe you understand the position of the market and a probable reversal, then it's all about the trading strategies, position size, and those sorts of things. So that's what we're looking at now is that once again, the S&P/X has continued into a very high probability zone to complete a weekly low. So, and this is what we update in our reports 3 times a week, is once that reversal is made, and then we look at what's the reversal confirmation signal to actually enter a trade. But this is enough information that you ought to be able to use over the next week to design a specific trade plan and a reversal trade plan for a probable weekly low next week. At the latest, the week after that. But given the momentum position, the timing position, the price position, I got a feeling it's going to happen within plus or minus a day of next Wednesday. That would be sometime next week. Really look for a reversal next week because that could be a very significant low in the S&P. At a minimum, a weekly low, 3 to 4 weeks net bullish. Could be a whole lot more than that. Quick look at the NASDAQ weekly. We look at the NASDAQ. Of course, all the indexes are in substantially the same position, but here's the NASDAQ again. Decline, rally, decline, new low, rally with a close, weekly closes within the range of the wave A, and then this new low coming right to the 100% alternate price projections of what I have labeled a wave A to a wave C. And we're right in the 38 to 62% time retracement from the December low. So it's a little bit different lows and highs on the NASDAQ, but it's basically telling us the same thing, as we're in a significant time zone to complete this corrective decline, or at a minimum a weekly low, right at the price relationships, and so we're just looking for that confirmed reversal signal here in the days ahead to position on the long side for potential fairly significant rally. That's what I'm looking at for the stock indexes in the next week. Well, that's it for today, my friends. If you like what you learned, check out our DT reports. We update all of these major markets 3 times a week, and as you know from this video, this could be a very exciting week coming up for the stock indexes. So be prepared, take advantage of this information, and I'll be back with you in a week or two with another market and another update and some more teaching you how to identify trade opportunities and trade strategies. Okay, that's it for today. Robert Miner, over and out for now.